Now, a key element of this budget, as I said, has been tax reform. Finance Minister Nirmala Sitharaman announcing major reforms in personal income tax in the first budget of the new decade. No tax will be charged up to rupees 5 lakhs, 10% tax for those earning between 5 to 7.5 lakh rupees against the current 20%. Tax for annual income between 7.5 and 10 lakh rupees reduced from 20% to 15%. Tax also reduced for those falling under annual income slabs of 10 to 12.5 lakhs from 30 to 20%.
So we've got some tax consultants from Deloitte who've come in to make sense of the changes that have been made in the tax slab. But before that, let me take our viewers through the new tax calculator. I'll take you through the new tax calculator and then we'll get the tax consultants to tell us whether it makes sense to move to the new regime or does it make sense to stay with the exemption. So if your income is between 5 to 7.5 lakh rupees, earlier the tax rate was 20%, that's now down to 10. From 7.5 lakhs to 10 lakh rupees, from 20% to 15, from 10 to 12.5, too many slabs in my view, but from 10 to 12.5, from 30% to 20%, from 12.5 to 15, from 30% to 25%, and 15 lakhs and above, it stays at 30%. But the difference is, if you move to the new tax regime, then you don't get any of the exemptions. Sudhakar Sethuraman joins us. He's a personal tax expert. Himanshu Patel joins us, works with Deloitte on direct taxes. Sudhakar Sethuraman, obviously it will take time. It's a good time to be a CA. You've got lots of people coming into you. But that said, does it, for most people who are watching, make more sense to, if their salary is less than 15 lakhs, to shift to the new tax regime without exemptions or stay where they were?
Right. See, in a way, the government has introduced a new personal income tax regime so as to reduce the compliance, so as to reduce the compliance for the individuals. And in that process, they have listed about 5 tax rates. Now, the point to be noted is the details. We have to see how this new personal tax regime is being worded by the government, because the government is proposing removal of exemption and deductions. While prima facie numbering of assuming an income of 15 lakhs, and if you assume somebody is going to forego an ATC deduction, which they would normally get in the form of housing loan or provident fund, that would not be available under the new tax regime. The good thing is the new tax regime is optional, but there cannot be a blanket yes or no towards the new tax regime. We have to see how this is going to fit for every person based on the exemption he or she avails, so that we can see how successful the new tax regime is.
Himanshu Patel, your sense of the new tax regime that's been rolled out and whether it makes sense for people, is it actually going to leave more money in the hands of the taxpayer?
Yeah, so Rahul, I think I'll echo with what Setu has said. While at the first blush it appears that one should take a plunge at it, because at an optimum level you are seeing the absolute reduction in the rates, but at the same time you have to sacrifice a lot of deductions. Now, what are those deductions actually? Do you forego the interest on self-occupied house property? You need to forego the investments and the ATC. You need to do a balancing act and then to see what's in it for us.
Why do we, Jaggi, need so many slabs? 5 to 7.5 is one, 7.5 to 10 is one, 10 to 12.5 is one, 12.5 to 15 is one. You can surely simplify this and have fewer slabs.
Absolutely. Yeah. Actually, what they have done is, in the name of making it simpler, they made it more complicated. Now, you first need to choose your regime. You will have to say whether I want the old tax regime or the new one.
No, but that's not so unreasonable. Let me explain to our viewers why. Because if you've done your tax planning, buying some houses, you occupy this, suddenly you say those exemptions are gone. That's not fair. So you've given them, like you've done with corporate taxes, the option, and gradually gravitate towards no exemption regime.
Part of a LIC policy or something, you can't stop paying the premium.
That's true. So that's reasonable. Yeah. That's not unreasonable. But too many slabs, PN Vijay.
Yeah, absolutely.
I think it's by no stretch of imagination can you call this simplification, moving from 3 slabs to 5 slabs.
The unstated part here is that this will lead to a huge lot of complications on instruments which are long term, ELSS, LIC, medical insurance, all of this. Because if you are invested, currently the regime for savings is exempt. And so if you're moving to exempt tax, then what happens to you?
Let me ask the tax expert, because that is one issue. The other issue, and that many will believe is also a boon, a benefit, is that by March 31st, if you've got an existing tax tax litigation on with the government, you will only have to pay the original penalty that is demanded. There will be no additional interest.
No
payments.
penalty, Rajdeep, just the claim.
Just the claim, no additional penalty, no
If you
additional.
ask me, this is the biggest bang in this budget.
Yeah.
This is the biggest.
What it will do,
There
though,
will be
is
about-
only clear that backlog of cases that exist to some extent.
And get money in the government's hands, no?
Yeah.
Government will get money, no?
They got 40,000.
No, but look, we said at the start of this of the morning that this budget was about reviving the consumption cycle. It was about reviving the investment cycle.
Rajdeep?
Have we been able to resolve the two main issues? If that was the problem, if this is a demand crisis, it's not about the government garnering more resources. It's good if tax claims are expedited, but that is not the crisis this point. Do you see tax claims being expedited, sir, as a result of what the government has done?
Right. So, from a refund claim point of view, we have the last 2-3 years, we have seen an increase in the refund processing by the government. But when it comes to the dispute aspect to it, the disputes are still piling. That's why the finance minister made a reference
it's a good
about.
move.
Okay, Rajdeep, I want to go across to understand what's happening in the markets to Mumbai. Sanjeev Saraf works with ICICI Securities. He's joining us on the broadcast. The markets at this time, the BSE 400 points down, the Nifty 133 points down. It went down by almost 700 points. Why have the markets reacted so negatively to this budget? Mr. Saraf, welcome.
Yeah, hi. Well, the markets react because they hope too much. It's not a Bollywood blockbuster. It's something to do with structural reforms in the economy. And I think the FM has done a great job by taking forward what she had left last time when the corporate taxes were reduced to 25%. Now this time also with the DDT coming in, getting exempted, now you'll have better cash flows that will lead to better PAT. If you looked at the last quarter, the PAT earnings of the corporates of the NSE Nifty has been up by 21%. I'm sure this will give a further boost to that. And hence the market will react as of now, but it will take some time, and Monday onwards I think the market should go up. Yeah.
Is the market's problem therefore one simply of irrational expectations? Is that what you're saying? That the expectations before this budget were much too high?
Absolutely. When you set up expectations, knowing fully well where our economy is, and the fact that the GDP growth has slowed down, there have to be measures, especially on both taxation and the growth aspects that the FM has laid down. And you look at the NBFCs, the banking sector consolidation, the steps that were taken, the MSC segment, I think all put together will lay out a foundation for the next 2 to 3 years actually. You cannot expect something to happen tomorrow. That's something very important.
That's an interesting way.
Nominal, of course.
That's an interesting way of putting it. But before that, just very quickly, because there is this, go ahead. Actually,
Radeep, I just want to ask Mr. Saraf this question. I mean, we all know that the economy is in the shit house, right? Every possible indicator is going down. Employment, consumption, private investment. Do you think this budget is really going to help? Isn't this a missed opportunity? Isn't this something the nation was expecting? And you seem so happy, feel good factor, this, that. I would be crying, isn't it? She blew it. She blew it. She had the chance, she blew it.
I know. They're always.
Is it that CII won't say that or something?
No, I know you have a point, but
Yeah.
No, I think you have a point, but the fact is, please look at numbers. If $26 billion have come in as FDI versus the 22 billion last, the same quarter.
Listen, but domestic investment has fallen.
Why is the money
Why should we be
There's
so
some
focused
kind of
on FDI?
Resilience in the economy, right?
Let me for a moment stop you all, because Mihir, this is going to go on through whether this is a missed opportunity or not. There will be those who will say, look at the last 6 months and the efforts that Nirmala Sitharaman has made. Don't just focus on the budget. The fact is, it hasn't worked the last 6 months. What is to say that what has happened today will make any difference? To that extent, maybe PN Vijay is right. It's a missed opportunity, and CII won't admit it.
Well, CII will never admit it. I mean, everyone, I don't want to say anything, but, generally, the industrial classes are never able in this country to say what they actually think. All right? And that's a sad reflection on the way the state operates. But the truth here is that we cannot look at this budget and say with any confidence that a revival has been set in motion as a result of this budget. That is what has gone wrong.
You know,
That's why the markets are reacting the way they are.
Many would, of
Can I
course, say
ask
that's putting too
Sudhakar
much
and-
of emphasis on the budget itself, of course.
Can I ask Sudhakar that this is coming from somebody who's watching and is very interested in knowing, if you do a back of the envelope calculation and I claim everything that I can, so I claim ATC, I claim on the house, I claim medical, I claim everything that I can, and I then want to move to the new regime, how much will I save? Like how much extra money in my pocket?
Right. See, the finance minister with an income base of 15 lakhs did a comparison, and in the budget speech she mentioned there could be a savings of 78,000 rupees.
No, but if I claim all exemptions.
Yeah. So if you claim all exemptions, still the values will get reduced substantially. Just a rough calculations will provide you a benefit of few thousands of rupees. It's not going to be 50,000 or more. It's going to be few thousands of rupees.
You know, I think that's the problem. There's too much of tinkering again. You know, this is the Tinkerman incrementalist style budget, and that's the problem, I think. Chaiti Narula also joining us at this moment. Chaiti, what are you picking up at the moment? Is there a sense that this is a missed opportunity, or should I say the finance ministry has never missed an opportunity to miss an opportunity for the last 6 years? What's true of Rahul Gandhi in politics is true of Narendra Modi and now Nirmala Sitharaman when it comes to the economy.
Well, you know, Rajdeep, whenever you are at the CII or the FICCI or the ASSOCHAM, you hear things like, we still have to read the fine print to really comment. It's too early to comment. Politically correct is what always India Incorporated has been. I've got with me Mr. Vipin Sondhi of Ashok Leyland. Let's take that question with him. What do you make of this particular budget at this point of time? As far as your sector is concerned, there was a thrust on capex. There was no direct demand generation that we will be able to see going forward as far as your sector is concerned. There's derived demand though. How do you really see this pan out, because the markets are tanking as well?
Yeah, the positives is that the fiscal space, which everybody was worried about, which has been created from 3.3% to 3.8%, there's a 21% increase in capex. Now, you're absolutely right that the auto sector didn't get a specific mention. But what we had also suggested was that if a lot of this capex and infra spend takes place in rural infra, which there seems to be a thrust,
But don't you think that there should have been a focus on the auto sector, since we've seen an unprecedented slowdown in that sector? There was just no mention of it.
One always likes to see one sector mentioned, and therefore you're right about the derived demand. Yes. But even rationalizing of personal taxes, as well as perhaps creating jobs in the rural sector, will in some way stimulate consumption. And our trucks carry goods which are actually consumables. So in a sense, it is derived demand. There is something for it in the construction sector as well, and the at least the heavy commercial vehicles which we make are involved in construction as well. So in a sense, it is derived demand, but good that capex spend is going up.
Two things that everyone at India Incorporated was expecting. One is putting the money in the hands of the consumer. Yes. Second is bringing the liquidity back into the market. Do you see any of those two happening?
So putting money in the hands of the consumer through personal income tax rationalization. On liquidity in the market, the one part that's been touched is MSMEs. Now, MSMEs are actually the bulwark or the backbone of any industrial economy. And when we have a situation where some amount of NBFC funding will take place through invoicing on MSMEs, that's positive.
Right.
But has there been a direct infusion? Perhaps we haven't seen that happen.
Net, can we say this was a run-of-the-mill budget? How would you put it?
I would say that fiscal space has been utilized properly. Sector-wise has not been this thing. Have the auto sector was expecting, it wasn't. But infrastructure, overall infrastructure is good.
All right, thank you so much for joining us. As I said, Rajdeep, it's too early, as the India Incorporated always puts it. They have to read the fine print before they can really appreciate or not appreciate the budget for that matter. But net, this is what I'm picking up. I'll come back to you with more reactions from India Incorporated.
You know, this mismatch between CII's public pronouncements and private pronouncements has to end one day. But we'll come back to that at a later stage. The fact is, This budget is being seen, at least on the left-hand side of the table at the moment, by a missed opportunity. Rajiv Dubey joining me of business today. Rajiv, what's your sense? Is it a missed opportunity? You've been banging on this is a demand problem.
Yeah.
Got to revive consumption. Is this budget going to do that or not?
So Rajdeep, I think this budget has tried to do something about the consumption problem. You know, if you look at whatever money is going to be left in the hands of the common man, we had said just before the budget that this is going to be a budget for the middle class. This has truly been the focus of this budget in my view. There will be some money left in the hands of the middle class.
How much?
The infrastructure.
As our tax experts are saying, there's a lack of clarity as to how much money actually will benefit.
Yes, so I think some of the calculations that we have done, like even what she announced, up to 15 lakh, there is substantial saving.
She says 78,000 up to 15 lakhs.
Up to 15 lakh, there is substantial saving, especially if you are earning
78,000 if you're not using any exemptions.
No,
as you use those exemptions, the 78,000 will keep getting chipped away. That's what Sethuraman is saying.
So if you are availing of this, that's precisely what the calculation that we were also trying to do. But it seems like there is some saving, if not very, very substantial saving. But up to 15 lakh, you will earn.
But Shankar, is it directionally suggesting we are heading towards a no exemption period? Not now, maybe 3-4 years. You're setting the roadmap for that.
That's an aspiration. But in a country where the demographic average age is 29, and if the person has been employed for 5 years, he's already claiming some exemptions, he's already taken a loan, he's already into the gravy train. And now you can't ask him to sort of get off the train. And so this is the story here is, I mean, you know, when all the details are worked out, it won't work out too much. Also, Rajdeep, the issue about the cases thing, there are something like 90,000 appeals pending across the country worth 6 lakh crores. That should have been the focal point of the restructuring of the tax administration.
That's what the amnesty scheme is about.
Yeah, that's what they're claiming.
Only says
it's
that
for direct taxes.
Yeah, for direct taxes for only this year, where you already have a claim, and if you pay, there is no penalty.
Correct.
What about those people who have paid their penalty and are waiting for the government to appoint people on the tribunals to set? I know people in Bombay who on real estate, on long-term capital gains, there are something like 60, 70 major societies.
Very interesting. A chartered accountant has sent me, please correct your headlines. Rejigging tax rates for God's sake is not a reform. You know, it's an interesting way to put it. You know, we are clutching at this word reform. You know, this is not reform. You know, this is again,
not only that,
you've been saying it for the longest time, it's all incrementalism. It's not making those kind of major tectonic shifts that we need to do, given the state of the economy at the moment.
Yeah. Can we go to Kiran Mazumdar-Shaw from Biocon? She joins us on this broadcast. Ms. Shaw, welcome. It's always interesting to understand from you what you thought of Nirmala Sitharaman's budget. It's the longest speech ever made by any finance minister. What did you make of it? How are you decoding this?
Well, I think she tried to basically at least assuage business sentiments, which I think she did. She hasn't exactly made everyone ecstatic about the budget. I think in all fairness, she did try to cover a lot of ground. Some of it was very important. I was particularly, heartened by her focus on investing in those 2 national science schemes on quantum computing and genetic database creation. But I think, I think everyone's quite concerned about the dividend distribution tax now being taxed in the hands of the recipient. I'm not sure whether that's going to really go down well, because on one hand, you're basically removing that burden from the corporate end, but then you're going to collect more tax from the recipient. So I'm not sure how that is going to go down with investors.
Is that the reason why you feel at the moment, Kiran Mazumdar-Shaw, the markets have given this a thumbs down? Because there is a lack of clarity over the dividend tax. The fact, as you said, that it will come to individuals, not to corporates, that there's been a lot of tinkering, but no major reform that really would set markets particularly into a sense of buoyancy.
Yeah, correct.
Yeah, that's what I mean, Rajdeep. You know, that right now I think the markets wanted bigger, sort of statements and announcements. And I guess a lot of that did happen between the two budgets. You know, I think the corporate tax coming down to, the 22% and the 15% levels. The only new announcements were the, tax-free status for sovereign bonds investing in infrastructure projects and things. Well, I don't think that's going to move the needle. So the one good thing is that the government is going to invest in infrastructure. Of course, divesting its stake to a certain extent in LIC is one of the easiest ways of them to raise money from their own public sector undertakings, but they need to actually look at other avenues to do that, because that's not really convincing the markets that that's the right thing
forget
to
the
do.
markets
But
for a moment,
personally,
ma'am.
I believe that's not a bad
forget the
thing
markets for more than the markets. This was seen to be the budget that would revive the consumption and the investment cycle. These were the key areas: revive consumption, kickstart investment. Do you see either of that happening? Given the slowdown that we've had over 6 successive quarters, is this budget going to trigger any kind of revival? All the steps over the last 6 months have not actually achieved that. Is there anything in this budget that you see will trigger either consumption or investment?
Well, they have made big announcements of big infrastructure investment, and if that happens, then it might revive, that part of the economy, and thereby the kind of impact on investment and jobs. But other than that, I mean, I haven't seen huge announcements that can improve consumption, because even though they have basically reduced income tax, up to that 15 lakh slab, I don't think it's going to really make a huge difference to consumption.
I want to go across to Mumbai at this time. Niranjan Hiranandani from the Hiranandani Group joins us. He very famously declared at the India Today conclave that the need for the economy right now is of chemotherapy, that just an allopathic medicine will not do. Have you seen the chemotherapy that you wanted being administered? Or do you think this falls way short of chemotherapy? Mr. Hiranandani, welcome.
I think the chemotherapy direction has been addressed very correctly. What is lacking is the dose of the chemotherapy seems to be grossly inadequate. So while they have moved in the right direction, look at the kind of description which has been given for each of the sectors, whether it is doubling the farming income, infrastructure, health, education. Perfect. I think the direction is 100% perfect. The right medicine is known to the government and they're going in the right direction. I think the dosage of chemotherapy is very short. I think we needed at least a 33% more investment into infrastructure or medicine in order to shoot the economy. Number 2 point, which I thought was lacking, is the fact that these doses are good for a medium and long-term improvement of the economy. What we needed was a bullet shot which gives the economy a kick. You know, like you take a morning cup of tea or a black coffee to wake up. I think that was missing. What you needed is a black coffee and a shot, a morning shot, which really brought up a quick turn in the economy. They were very good points in terms of, I love the issues on agriculture, I love the issues on higher and technical education. I think, my God, I've never heard a finance minister being able to give such a clear picture on the direction of the economy, while primary and secondary education is already being met. The fact that higher and technical education needs a paradigm, the fact that skill development for engineers and other people is necessary, and that direction. I think directional wise, the government certainly has been able to take the bull by the horns and understands the direction. As far as giving enough money in each of the segments, grossly inadequate, and I think they need to put much more. I wouldn't have bothered if they had said deficit financing is increased by another 100, even from 3.8 to 4.5. It wouldn't have mattered. But I think there is not enough money going into the economy to kickstart it fast enough.
But you know, many believe that really is. You called it a booster dose, Mr. Hiranandani. How would you call that, Kiran Majumdar-Shaw? What is it that the government now needs to do? Let's be very clear. It isn't as if the budget itself is the magic potion that's going to transform this economy. There is a serious problem, Kiran Majumdar-Shaw, that goes beyond just a budget. Could there have been, according to Mr. Hiranandani, directionally the budget is fine. Do you believe that it's directionally fine? Has it really acknowledged the scale of the problem?
No, I think... no, that's the problem. I think directionally very sound, but I think the scale of the problem is much greater than what is being addressed. And I think that's really the problem today, that, you know, everything, I mean, from a messaging point of view, very, very good. It's very rounded, addressed and ticked all the boxes. But I think, as Mr. Hiranandani said, I think the scale of our economic challenge is much greater. And I think the investments being announced at the moment will simply not move the needle the way it should. So I personally believe you need much greater investments. I would have been also very happy if the fiscal deficit had even increased a bit. One good thing is, of course, they have talked about PPP in some of the train model, you know, the new railways model and things like that. But, you know, it falls way short of what we need to do in terms of the investment needs. And that's what really worries me. But at least whatever we've done right now, they need to do it with breakneck speed. So far, the whole budget is a very medium to long-term economic model.
Can I just turn this on its head? You know, there's a government bureaucrat who told this to me, and Mr. Saraf, you can take that. Ask not only what government can do for business, what is business doing for government, or what is business doing for the country? You've got your corporate tax breaks. How much of that is being used by business to actually, you know, sort of revive the animal spirits of the economy? It's time that business also did its bit. Instead of, according to this government bureaucrat, hoarding the benefits that you've got with the corporate tax cuts, start investing in big projects.
Yeah. Fair point, fair point. Absolutely.
But you know,
that's the reason why the government has given this, you know, tax cuts. And the DBT.
Let me get you one by one. Yeah, Mr. Saraf and then Kiran Majumdar-Shaw. Should business be doing more very quickly?
But first, let me...
Yeah, go ahead, Mr. Saraf.
Let me clarify one thing. That first of all, the knee-jerk reaction of markets cannot be taken as a mark sheet or a score sheet for the government on the economy, because it takes time for the corporates to actually get into the cash flow system. I believe that the entire, you know, all the points that have been mentioned by the FM on the corporate segment will lead to better cash flows. And once the cash flows are in place, the capex cycle happen. So we'll address the question of investments for sure. About the consumption, it has a lag effect, and I'm sure it will lead to that position. So I would say the government has given us, the corporate sector, a great position, and we will deliver that in the next 1 to 2 years. It cannot happen in a quarter actually. That's what I'd say. It takes about a year or two to see the benefits accrue.
Yeah, Ms. Shaw, you wanted to say something about whether government should be looking to corporate India now to revive the animal spirits of the economy, as bureaucrats keep telling me that it don't always expect the government to do the hand-holding.
That is fair question. Absolutely fair.
Fair enough. I think, you know, we are in a...
yeah, just a minute, Mr. Saraf. Let Ms. Shaw respond. Yeah, go ahead, Kiran Majumdar-Shaw. Go ahead.
No, fair enough. I think, you know, we are in a global economy. We have to basically be very competitive because tax rates across the world are extremely low. And I think the government has done well to bring it down. So I think from that point of view, as was said earlier, there is going to be a lag. I mean, the moment you hear a tax rate cut doesn't mean that you're immediately going to invest, because there needs to be a demand, there needs to be a gestational phase when the investments are made. So it's not something that's going to really give you a quick return in terms of that investment. But having said that, I think, you know, we need to make sure that all that has been announced in this particular, you know, budget has to be implemented fast.
You know, that's an important point because at the end of the day, it's a governance issue. It's an issue of implementation. Niranjan Hiranandani, a quick point, because many thought housing, real estate, construction is going to be critical to reviving the economy. Do you really see any green shoots of revival?
I do see that some parts of the real estate have started picking up. The commercial, of course, is doing extremely well. The residential side also has started picking up, and not to the extent to which that we want, but we can see green shoots happen in the Mumbai, Thane, Navi Mumbai segment. We do see some pickup in the sales which is taking place. We've had good sales in our own company, so I can't complain too much. But one thing which I am still finding short, really, is the liquidity trap that most SMEs are gone into. The bank, and I think the Reserve Bank of India, needs to do a one-time rollover in terms of existing critics, which was done in 2008 earlier. I think that is important to do, and an improvement of the liquidity, not only of the NBFCs, but also to provide the liquidity which is now lying with the banks to come to the small and medium manufacturers for real estate, for manufacturing and the other sectors of the economy. Money is still stuck in the banks. It's not going into the trade. How can the expansion really take place of this economy and of capital goods investment if there is not? One more thing which I thought was missing was we needed a bank which would do development long-term funding. Today we have all commercial banks. They are not able to look at long-term funding of infrastructure projects. I thought that should have also come the way by now. Funding, liquidity is really a problem which we are finding very seriously in the economy. It's missing completely. No matter what you do, if you don't have liquidity, you will not be able to move ahead.
So that's the critical question. Well, has the finance minister addressed the liquidity issue?
No, the question to be asked.
One by one, yes, Shankar.
One second. Let's ask Niranjan
yes,
whether the 25,000 crore package announced in October, any of that money has come to the real estate sector.
Not yet. I think.
You want to quickly answer that, Niranjan?
No, it's not yet come to the AF, no?
I believe that less than 100 crores has been sanctioned by the Alternative Investment Fund. So 25,000 crores is far away.
Yes,
we keep saying that there is a liquidity crisis and banks are not lending to the MSMEs. You see, banks have been reeling under an NPA problem last 5 years. Okay, these MSME balance sheets are unbankable.
She's announced a few schemes there specifically for MSMEs to restructure their loans, make it a little. Do you believe that's enough or not?
But why should a banker who's already reeling under NPAs, why should we force him to lend to, unless there is a credit guarantee mechanism or something? The root cause analysis is the MSMEs are in trouble because there is no demand in the economy and their viability is in doubt. To tell the bank, you people are sitting with money, but you're not lending, you mean banks...
So we come back to it. The crux of the problem, Professor Mehrotra, the problems that were identified before the budget, have they been addressed in a clinical manner, in the manner in which they should have been? Or was it a bit of tinkering here and there?
Well, inevitably there was going to be tinkering, but I've now had a chance to look at some of the numbers, so let me just say a few brief words about that.
Yes.
There is certainly good news in the sense that when the FM talks about a national infrastructure pipeline, we are seeing some real evidence of that actually. So for instance, let me tell you what the numbers look like. On capital account, the revised estimates for 1920 said that the Government of India spent 3.48 lakh crores on capital expenditure. That's expected to go up to 4.12. That means about 64,000 new crores on capital expenditure, which is good news, which means that many of the new projects that we were talking about pre-budget speech are actually going to come about. Hopefully this will draw in private investment. So there is definitely, I'm more pleased about this budget than I was about the last budget for the following reason, that in the last budget, as a proportion of GDP, capital expenditure actually came down from 1.4 to 1.3%. You know, the central government in any case doesn't do too much capital expenditure. It's the state governments do. Here we are seeing 60,000 crores. That's an increase of 0.3% of GDP. So I'm somewhat relieved. My expectations weren't that great for the simple reason that the fiscal space was not there.
Okay, let's take a break at this point. You know, I think we've got a sense that clearly this has been a budget which has taken which has occurred in an environment of an economic slowdown. So naturally it will be looked at perhaps more clinically and more analytically than previous budgets, certainly the last two budgets, which were in the shadow before and after an election victory. But has enough been done to really kickstart the consumption and investment cycle? Or do we simply have to wait and see over the next couple of quarters to see if those green shoots of recovery do take place or not? Plenty more. You're watching our special coverage here, Modinomics 2020.